Okay, so everything that you have learned now, starting from introduction to Forex, this is where it all comes into action, right? This is where we all put it together and create what we call the bank trader strategy. That is the most powerful strategy that you ever learn here at Day and Night Forex. So what makes up the bank trader strategy is everything that you have learned in the introduction to Forex, all the patterns that we've shown you, all the candlesticks patterns, all the chart patterns, the different types of market structures that you have learned. I'm pretty sure you're now familiar and understand the psychology behind the creation of the different kind of candlestick patterns that form on our charts. All of this is going to come into this one strategy. So remember, you also learned about the pin bar strategy. You also learned about the trend line strategy just recently, which is one of the most powerful strategy ever, as you saw how we were able to incorporate the horizontal support and resistance as well as the vertical support and resistance for us to have a confirmed entry position. So all of those powerful things that you've learned so far, we are going to put it all together with this strategy right here that you're seeing, and this is going to be the best lesson, our final charge, and basically you should be able to win in this market after this lesson. So let's jump straight into it and get started. So remember earlier when we were talking about double tops, the double top formation, I told you that we have different types of M's, right? So this is where you are about to learn about those. So these are the different types of M's that we're talking about. So remember, double top is basically the M formation or the W formation when it comes to inverse, right? So it's an M formation when we are looking for selling opportunities. So this is where you're looking for selling opportunities, and when you're looking for buying opportunities, it's basically just the inverse, right? It will be just upside down. That is what we call the W formation. So the W formation will be like this, just the opposite of this. So it's exactly the same shape, but it just in the opposite side, it will be looking up, right? So it will be looking up. Instead of having buyers first, we'll be having sellers first, so that we can look for buying opportunities, right? Here we're having buyers first, and then we are looking for selling opportunities, so that we can enter the market, right? So that is what is going on right here on the screen. So these are the different types of M formations that we have. So the first one, as you can see here, our first leg of the M has been created by buyers, right? Because here we are, as I said, we are in a bullish market. We're now looking for to go into a bearish market, right? So our buyers are buying. They're moving the market. They come back to retest this level at our neckline. Remember what we talked about, the neckline, where the market will come to retest, right, and then create a second leg and then come back to a breakthrough, which is a powerful point right there. So we also call it the support, right? So here, as you can see, it came back, created our first leg. Our second leg was a little bit higher than the previous one, so it created a higher here a little bit, and then it came back to break through our support here. So it was a confirmed M formation that was created there, so giving us the opportunity to actually enter that sell trade right there. So powerful formation is a very, very powerful and reliable trading strategy when you put together with everything that you've taught, that we've learned, especially the horizontal and support resistance. Very, very key when it comes to this. The M formation, right, also known as a double top. So here again, the second one is whereby both points of the M are actually at the same level, right? So roughly about the same level. So you can say they're creating a resistance line, so they're bouncing off a resistance point, and that is how this second M formation is formed. As you can see, we still have our support over here, and then we this is how the confirmed M formation will actually come out looking like, right? And then the third and last one is basically when you have the first point is actually a bit higher, and then the second one will be lower, but still we'll have that M formation forming. As you can see, it still look like an M. Remember, we said you cannot be looking for picture perfect patterns when it comes to these market patterns, right? Because the market it doesn't move following these patterns, right, or making these patterns very clear for us, but it's for us to spot them so that we can understand what the market is trying to do, right, what the market is saying to us. But basically, it's for us to actually spot these patterns, not to wait for the market to actually give us a picture perfect condition of that M formation, right? But as you can see, these are the different variation that you should be looking out for that confirm that it is an M formation and you're looking for selling opportunities. So this is basically a bearish reversal pattern. Firstly, the price will be in an uptrend, as you can see in all three. Negotiation between buyers and sellers happens in between here. The M pattern is not complete until the price breaks out of the M or the support. So as we say, this is our neckline, which is our support, so we call it the support. So once the price breaks through that, that's when the M is complete, and we can say, okay, we now have our complete M formation, and we can look for opportunity to sell right in the M formation. So that is what we call our M, and this is how you get a confirmed M formation, right? Don't force it. It must be clear on your chart. It must be clear. You should be able to clearly write it out like this, or really see that this is an M formation on your chart. So secondly, the phases of the M pattern. So we first have the uptrend. The longer the uptrend, the more powerful the M, and the higher the potential to make a profit out of it. And then secondly, the first leg of the M forms when the price get rejected by resistance, as we said right here. So it was rejected by the resistance, and then it came back to test a lower level, making a higher low, and then making a higher high, as you can see right there. But here it just went back to make exactly the same level. Here it made almost like a downtrend that was starting, right? So it's sort of a downtrend, because here we have a higher low, all right. But then at the same time, here we just have what we can actually call a lower high, right? It's a lower high because it's lower than this point right here, meaning that once it comes back and breaks through here, that's a downtrend that is confirmed, meaning that it's actually like sort of a double confirmation in one when this M pattern forms like that, right? So the second leg forms when the price rises from the support after forming the first leg of the M, and then it also gets rejected by resistance area, and then it gets pushed back to the support level, and then potentially breaking it through if it's a valid M formation, and then that's when we have our opportunity to enter the market. So the M is not complete until the price breaks and completes below the support level, and then as we said, the price has to come back and break through the support, which is the neckline. You might also call it the neckline. So once it's break through that, the candlestick has to close below that support line, so for it to be confirmed, right? So remember what we said when we were talking about trend lines, that if in a trend line, let's say this is a downtrend, if it's now about to go up in an uptrend, and we want to confirm that it's a broken candle, is a broken trend, we have to find out that the candlesticks comes through from the bottom, right? The candlestick comes through from the bottom and closes above, right? So the bigger the body of that candlestick that closes above that line confirms our trend, the reversal of the trend much better. The bigger the body of that candlestick, the better it is. So that's the same thing that is happening here when the market is coming down. When this candlestick over here closes below this support line, support line over there, so this is where we are having our support line. When the candlestick closes below that support line, that is how we confirm that our information is now complete, and we should be expecting the market to carry on going down, right? So this is what we mean when we say the price has to break through the support line and close below that line.